G'day folks, Jim here from FX Charts, Friday the 20th of December. Following the messy results immediately after the FOMC yesterday, the dollar's had a pretty steady session really. It hasn't done a great deal, it's just consolidated its gains. The real moves have been in the commodities markets where gold fell quite heavily really. It's about $40 an ounce, it's back below 1200, while oil's West Texas crude's back above 99, looks as though it's heading to 100. But the dollar itself has had a reasonably steady session, as I say. It's getting a little bit thin now as we approach the weekend and the Christmas holidays, so I think I'll probably be fairly square going into the weekend. But having said that, we could get a bit of volatility today because there's quite a bit out. We've got we start off with the Bank of Japan interest rate decision. And that's going to be followed up in Europe by the UK GDP, and there's consumer confidence data out of the EU, Germany and the UK. And then later in the day we've also got the US GDP. So it could get a bit mobile later on, and I'd probably steer clear of it, but I'd certainly be well squared ahead of the weekend. But anyway, we're going to have a look at the charts, see what we've got. And the Euro's broken down below. This is a 4-hour chart here. The Euro's broken down below this trend line. It's currently sort of sitting above this sort of 136.5 pivot, but the indicators, the 4-hour indicators, are pointing lower, as are the daily. So I think there's a good chance we're going to come down here and test this sort of low 136 area, where we should see some reasonable support. The dailies, if we go further out, they're also sort of picking up momentum on the downside, so I think that's the way to play. If we were to see a rally above 137, I think it's probably a sell opportunity, and eventually, as I say, I think we're heading lower. And I guess on the daily charts, the next sort of major support is down around 135. We've got a bit of work to do before we get down there, though. Dollar yen. Well, as we thought yesterday, it hasn't managed to take out its post FOMC high, and it's chopped around above the 103, 103.80 support. Low was 103.77, 104.35 has been the high. The 1-hour charts are heading lower, as are the 4-hour. The 1-hour charts are heading lower. The 4-hour charts do point higher, but they are overbought, and there's a lot of option barriers, New York cuts today, so I don't think they're mostly in the 103.5 to 105 range. I don't think we're going to go above 104.50 really, so I'd be a little bit circumspect on dollar yen. I think we might just we might just drift into the weekend reasonably quietly. We might try and have a look at 104.5, but I'm not really sure we're going to go too much higher than that. In the longer term, though, nothing's really changed from yesterday. We don't need to go out to the weeklies again, and this 105.5, 105.25 area, where the 61.8% resistance lies, I think that's our next major target. Probably not until or I would think after Christmas. We may get there before, but I don't think so. Sterling. Well, after its spike high yesterday on the FOMC, it's like the euro. It's kind of traded sideways. I don't expect too much more today. We go back and have a look at the hourly charts. It's been a bit choppy, but it's holding its own. And I think further out, cable actually doesn't look too bad to me. Although if the euro comes off and the dollar strengthens, that's going to limit the upside for cable somewhat. But in the meantime, I think we're probably just going to sit around here between 163.5 and 164. Possibly head a little bit higher, but I'm not too phased about it today. The UK GDP number, if that's a decent number, which given the recently improved UK data it could be, we might see another test above 164. But I don't think we're going above this previous 164.65 high, and certainly not above yesterday's high in the coming session. Dollar Swiss, that looks all right as well. It's broken above resistance, and it's heading up towards this 89.90. It's breaking above the trend line resistance, I should say, and it's heading up towards the 89.90 FIBO resistance. If we can break there, then I think we're possibly going up to sort of this 90.5 level. Not sure that we're ready for that today. But the 4-hour charts are looking reasonably well supported, although they are becoming a little bit overbought. So as with the euro, I think we might see some dollar strength, but I don't think it's going to be enormous, and I wouldn't be surprised to see a choppy a choppy session going into the weekend. But with the dollar remaining an underlying bid to turn. The Aussie, well, it's not really showing much improvement, but it hasn't. It's still holding the base of the channel, which is now currently down around the yesterday's lows around 88.20, 88.18. If we go below there, as I've said before many times, that my head and shoulders target is around 87.80, and then we've got the channel resistance, channel support, I should say. This is a long-term channel which we need to go to the weeklies to look at. That's pretty solid down there, and I don't think we're going much below there. That's around 87.5 or so. So that should hold it today on the downside. I don't think we're going much below 88. The 4-hour charts, if we go and look at those, are actually showing us a little bit of bullish divergence, and we could get a bit of a squeeze up towards 89 cents. But realistically on the day, I think interest is waning, and it wouldn't be surprising to me to see a bit of a drift into the weekend. Likewise with the Kiwi, that has headed lower. It got down and tested the support at the 100-day moving average and the 200-day moving averages we've seen, which automatically brings us to the 100 week moving average, I should say, at 81.45. Don't think we're going below there. The weeklies are fairly flat, and I don't think we're going to see a major move go ahead of Christmas. The dailies are actually beginning to look as though they might want to try and push a little bit higher. So I think 81.60, 70 is going to hold it, and on the top side, 82 is probably going to hold it as well. We might see a bit of a pullback to sort of 82.20 or so. I don't think we're going up here to this sort of 82.60 level. So a reasonably range-bound session, I think, heading into the weekend with pretty little interest. So that's about it from me today. As I say, we've got a bit of data, the BOJ interest rate decision, the US UK GDP, some consumer confidence, but interest is really thinning out, and I wouldn't be too involved. So that's really all there is. That's it from me for this year. I'm travelling on Monday, so I won't be in on Monday, and be back early in the new year. And in the meantime, hope you all have a very good Christmas, safe Christmas. And to be quite honest, I'd be square going into the holiday period. So that's it. Have a very good one, and we'll talk to you in early January. Cheers.